All right, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's just get started with a quick little recap from last week, and where we always like to start off with our 10-year Treasury. Finish out the week at 157, still well within the range that we've been paying attention to. Very obviously, as we've been discussing now for week after week, once we got the break above our key Fibonacci level here in yellow, we just expect it to oscillate within basically that 1.46 and 2.08, so about 1.5 to 2% range on the 10-year rates. We did fall below our top parabolic trend line, but we're still well above the white one. So once again, I expect this to just, this to me looks like what we call a bullish reset. We're basically just going sideways while our indicators reset. So we now have slope on the TJD, TDMACD to the downside. We have multiple red histograms in a row, but what's happening with our actual chart, we're just going sideways. And same thing here, we spent quite a bit of time on the move up in the bullish control zone. Now here we are back inside the bearish control zone at the bottom of the range. So I would expect us to start finding strength here and start moving back to the upside. And, obviously nothing has changed here, but we'll keep an eye on that one. This thing doesn't move in just massive bursts. So I expect it to just sort of creep up here in time. And that's what it's been doing. And that's going to correspond also with what we have on the dollar. So here on the dollar, we obviously have been inside this long-term, turn off these moving averages, long-term sell-off to the downside. We displayed some very clear divergences at the bottom of the range, and then we broke out, retested, and then we've been getting continuation. Now here we are at the bottom of our pattern here. So this is an ascending broadening wedge. It's getting bigger, but it's going up while it gets like wider and wider. So we tested the top multiple times here, and then we tested the bottom twice. Just like I predicted, we would find some support at the resistance, or at some support at the heart line here, but I expected us to come back down. Now we have a third touch at the bottom of the range right here. We have technically broken out of the bottom of it right here, but we're essentially just at that bottom range. I would expect, based on our momentum indicators, oscillators, based on price action, and obviously, my main strategy is to buy support and sell resistance. So that's what I'm expecting to happen right here. I expect a bounce back off this range. And if we do get that bounce, like we're expecting, that will probably take us back to the top of the range. So anywhere up near like 94, 95. If we do continue to see weakness and get a breakdown from here, we can reevaluate as well. But I think that's less likely to happen right now, especially now that, throughout that move up on the daily, we basically reached the bullish control zone here, bullish control zone here, and then a third time right here. And now here we are back inside of the bearish control zone. So, we're in the area where we'd start to find strength and move back up. We're well below the zero line right here. But as far as moving averages are concerned, we did cross the 8 and 21 to the downside. We bounced off the 200 exponential and simple. But what we're paying attention to now is how strong is the rejection from it. Because the initial rejection was right before it. Got a small rejection and then punched through it, and then we came back down slightly lower than that previous low. But what we don't want to see is, a real like change in the trend and it just start rolling over to the downside. Now it's important also to remember that this is just the dollar in relation to the other currencies in the basket, primarily the euro. This is not the dollar in relation to, assets or, investments, etc. So the dollar can weaken here, but the overall asset prices don't necessarily need to decline like worldwide, or like markets don't need to crash or anything like that. This is just in relation to other currencies. So this has a lot of like outside factors, but it also explains why we see in dollar terms, like the European stock market is going to go up in relation to the dollar going down, because our dollar is losing strength, therefore we're losing buying power, or alternative prices of these assets are going up. So the relationship is just as important as anything. So we finish out an overall strong week. The Dow up near its all-time highs, but did put in a slightly lower low on the daily here, slightly lower high rather, but just kind of hung out at that same low. not what you want to see at the top of a range. But again, if these oscillators and indicators come back down and we just kind of go sideways, we could easily find enough strength for another burst up. But I think we got to be real careful here, because a lot of times crypto will sort of like foretell what's going to happen in the markets in advance. So we might get a couple days notice, or even a couple hours notice while the markets are still closed, what they're going to do based on what crypto does. It's sort of like, the canary in the coal mine. So we could very easily see a sell back off here. But again, this is an overall strong trend. SPY, the S&P 500, same thing. We slightly took out that previous day, like bearish looking candle, and got an overall bullish looking candle at the top of the range, basically just hanging out at all-time highs. We did, however, get the cross between the blue and pink right here. We're still very well inside of the bullish control zone, but we got the cross to the downside while we're essentially floating back up to like new highs. So a lot of times with this much weakness on the indicators, you're bound to see a sell-off, at which point in time, 400 is going to look like a very strong support, and we'll have to pay attention to. IXIC, Nasdaq, this one had sold off way before everything else, but had been like the strongest runner. Found support on multiple occasions, and then bounced back up essentially to a lower high. But showed some weakness at the top, came back down, gained some strength. But again, we got the hard sell signal across to the downside. We're still inside of the bullish control zone, but we're showing some weakness right here. It's not unrealistic to think this thing sells back off and comes back down to a new low. But what we're paying attention to right now is, like we've been talking about essentially with like some of the other tech stocks in particular, is, we want to see essentially these higher lows hold. So we have that low right here, then a higher low. So if this does sell back off, which it doesn't have to, but if it does, we want to see that hold, and that's going to correspond with our 89 moving average right here as well. So that's what we're paying attention to. Make sure that when this does sell off, we see strength, or maybe we take out this high and just see continuation, which is fine as well. You'll see a bunch of different times where we're inside the bullish control zone, getting hard sells, but not actually selling off that much. We're essentially just allowing the indicator to slightly reset and then move back up, and each time it's pushing higher and higher. But we do need to be careful, because we talked about like the divergences on some of these markets on like a weekly time frame, and how that overall is unsustainable. So here we cross, say on the weekly Nasdaq, we cross below our slope line. We're still underneath the slope line, even though we're showing some weekly strength, but it is blue still. If we stay under it long enough, eventually it'll go flat and then roll over to the downside and turn red. Obviously, depending on what happens here, like the Stochs are now curved back to the upside powerfully, looking like they want to get ready to cross back to the upside. And then we can pay attention to where our peaks were on these different indicators and oscillators, and see, are we seeing divergence on price action compared to our indicators? And in this case on the Nasdaq, we're not. So there's a lot of indecision, I think, in these markets right now. And I think as we get closer to a top, or some sideways consolidation, or whatever, sell off, whatever it ends up being, I think it's going to be more about where you're at and not just about deploying all your capital everywhere. So Russell 2000, obviously the weakest of the indexes. I expect it to be the weakest of the indexes. We obviously got the hard sell signal right here. And then we got a pretty powerful move after that. This is in the middle of the range. It's much less reliable. I prefer to see like coming out of the bullish control zone a hard sell, or coming into out of like the bearish control zone at the bottom of the range. But right now, this thing has basically just been selling off, consistently, still below the slope line, but is basically just going sideways. So you could argue once again, this is just bullish sideways price action before the next move up. Does that mean it can't just break down and sell off? No, not at all. But overall, if the indicators and oscillators are trending down while price action goes sideways or up, it looks bullish, because you're basically just refueling. You're stopped, but you're at the gas station putting more fuel in the tank so you can keep going up, or, inversely going down. So XLE, energy sector, this is a perfect example also of us basically just going sideways. We did take out that low and put in a new low since the high back here. Got the breakdown, came back up for the retest. This still looks overall bearish to me. It looks like it's getting rejected back at what was acting previously as support. Whether you have it as that orange line there, or you have it exactly where we closed last week out, or, Friday, I should say. But, basically it looks like we bounced down, found support at a lower level, and now we're getting ready to roll back over. Now, how far do we sell back off when we go? There's a lot of different areas we could take in mind. We have the measure move of the descending triangle right here, which we've already halfway completed. We have a couple different Fibonacci levels. But again, you know, overall, this thing is really just going sideways while the indicator oscillators reset. They were at the top of the range back here, absolute top of the range, you know, on both these things. And now here we are below the 0 line here. And now here we are like below the 40 line here, getting towards the bottom of the range. So it's just a matter of time before these start to find strength and move back to the upside, in my opinion. Let's go ahead and we'll do tech next. Jump around a little bit today. Just going to take a quick look at Tesla. Tesla is still getting rejected in that same, you know, red box area that we were targeting between the 618 and the 786. You know, just like the rest of the tech sector, you know, we have a bottom. We have a bottom here again, and now we have a trend line that's going to correspond more than likely, depending when we get there, with the 89. So, you know, that's going to still look like a buy area. Could Tesla still have further downside potential? Yeah, I definitely think it does. And like, if I had a bet right now, will Tesla ever be at a lower price than it is now, or will it just always go up from here? I would bet that it's going to be at a lower price than it is now. But, you know, are you going to trade based on that? Could it go higher first and then go lower? Yeah, sure. But I don't think this is the last time you'll ever see Tesla, you know, at $700. NEO is next. NEO finally showing some strength these last couple days. Basically just been selling off. And then now here we created like a very clear descending triangle. And now we've broken through that descending triangle. A couple trade positions in place. One for just like a little move back up to the 618, you know, with like decent little percentage to the upside with a rather modest stop loss, like 3-to-1 overall trade. You know, if NEO gets back up to like that $50.50 mark. Does it get there? I don't know. This thing's been so weak for so long. You know, it could go either way on these things. Apple next. Apple basically has already hit our measure move, and it looks to me like it's topping out here. You know, once again, we're in the bullish control zone at the top of the range. Looks like we're about to get the cross. Looks like we're potentially going to exit the bullish control zone. Multiple red histograms in a row. Is Apple going to go down from here? Yeah, some, but I don't know if it's going to break structure necessarily. I think there's a very high likelihood that we're seeing, you know, this same trend develop in a bunch of different things, especially in the tech sector, where we have a low, a second low, and then we're going to come back down and put in a third higher low, and then either get continuation or maybe we break down from there. But, you know, we have to wait for the price action to develop. Pinterest, you know, this candle was obviously the canary in the coal mine for Pinterest. It sold back off exactly to where we said. Same exact trade that we took last time. Looks potential. This one just did exactly what I was saying we might see out of Tesla and the Nasdaq and, you know, Apple. It just already did it. It did it ahead of time. So we have the first touch down here, the second touch. Most things are up in this area trying to decide, are they going to go higher, but showing weakness. This one decided it was going to sell off right away. Already came down, met our goal, put in a higher low. Overall, still looks bullish. You know, this is ascending broadening wedge. This situation right here, you know, remember the dollar. You know, what were we looking at with the dollar? The dollar basically bounced, top of the range, bottom of the range, top of the range, bottom of the range. Now here we are at the bottom, expecting, like what happens more often than not is, you know, you find support at the support. You find resistance at the resistance. You only break through either resistance or support like one time and get continuation. And then we start looking for new patterns to develop. In this case, you know, Pinterest now is showing that strength off of the support, that bounce that I'm anticipating out of the dollar. Now, once again, this thing could just fail, lose strength, and just dump out the bottom and, you know, just completely shit the bed. I don't think it's going to happen, but statistically it's not going to happen. But of course it could. But, you know, paying attention to where the indicators and oscillators are at, you know, it's not unrealistic to think this thing would basically just kind of go sideways to creep up from here, you know, and then we'll be paying attention, obviously. Does it put in a, you know, does it put in another lower high? Do we start to develop more of, you know, like a triangle pattern like this? Or do we break through it and get continuation to the upside? You know, obviously, once again, we have to wait for price action to develop and see. But, you know, it looks like basically now a bull flag at the top of, you know, a nice run up. We're basically just putting in like a flag consolidation pattern. So more than likely, in my opinion, we'll come back up to the top of the range. So maybe we don't get quite as greedy with this trade setup and we take basically like, you know, a little something more modest. If we take out like, you know, some of these previous areas, we don't want to be quite as bullish on the stop loss. So, you know, you could put in like a 10% stop loss right here and a 15% move to the upside. Well, that trade's not really worth taking at this point in time. As where if we took that same trade, you know, back here or, you know, with a short, tighter stop loss, you know, it looks a little more aggressive. So now you're in a position where in order to essentially meet like your risk reward ratio right here, you got to run something like a 6 or a 7 or even a 5% stop loss and say if you took out this low where we just came down to, you're expecting us to come back down lower to at least question that one, at which point in time you'd rather re-enter the position, or else you just sit out on this one because there's just not enough meat left on the bone. And that's what's going to happen with these triangle patterns is as the pattern gets tighter and tighter and tighter, there's less meat on the bone on each of these trades. So eventually, you know, you wait for like the breakout trade, or you position off the bottom of the range with a long, or position off the top of the range with a short, and then you're already in position for when that break occurs. Which Bitcoin is a perfect example. So when we get to that, we can talk about that as well. Zoom is still just kind of hanging out below the 200 exponential and simple. We'll have to see what happens this week. Really, this next week is probably going to tell us a lot about Zoom. You know, I am still very bullish on this in the long term, overall, like fundamentally and technically and everything. But, you know, the chart is basically just, it looks a lot like gold. It's just essentially just going sideways, resetting. How low is it going to go? I think it goes lower. I think we get back down to the bottom of the range. Could it easily just burst to the upside here, consolidate, and then get a breakout? For sure. But remember what gold did. You know, it moved all the way to the bottom of the range, like we said, moved back to the top of the range, and now here it is at the top of the range showing weakness again. So it looks like it's just going to stay inside that range again and just do, you know, what have we been doing? Just oscillating between the top and the bottom. So you just take that same trade over and over again, and then the one time it breaks, yeah, you were wrong one time, but you were right to take, you know, you were right if you short around this level with the 8 cross over here, 821 cross here, and then, you know, you start developing like basically a bottom area. So maybe not on the first time, but on the second time or the retest of that line, you know, you'd start taking a long here. Then you don't get to the top of the range again. Maybe you don't take it the first time, but the second time up here, you can take a short and then a long, and then you wait until it gets back to the top of the range, take a short, or bottom of the range, take a long. And then the one time it does break, you've already been right so many times along the way that, you know, you can take a stop getting hit and still be like mad profitable on the situation. So but I think a lot of these things could easily sell off. I mean, I'm not sure how much the tax hikes will affect anything. I'm not sure, you know, if any of this stuff will even get passed, but just the talks of it sometimes is enough to at least spook the market, or at least make the market pay attention. Or, you know, it's like that little breath of oxygen when you've been like a little delirious for a while and you start to like sober up a little bit. So gold, so we were just talking about this, essentially just in that descending channel, you know, basically moved all the way to the top of the range, technically has gotten a breakout of the top of the range here, coming back down and finding support, you know, at a key level, the white support line here as well, you know, could easily break out of here and run and, you know, get continuation to the upside, either to a lower high or a new all-time high. It could easily do that. But I'm not going to fall for that. I'm not going to get overly ambitious on gold right now. We are at the top of the range. We're in the bullish control zone. We're about to get across back down to the downside between the blue and the purple, or pink, whatever. We're about to lose the bullish control zone if that takes place. We have multiple red histograms in a row. We are above the slope line. It is blue. But, you know, this is exactly what happens when you get rejected. So we need to pay attention to, is this just a rejection at the top of the range? And there was just that little meat on the bone, like little stop hunt, little fake breakout. And then we get continuation to the downside, exactly like what happened here, exactly like what happened all these other times when we got rejected at the top of the range. We're just getting that little push out to just kind of fake people out of it. Because the more clear this gets, the easier it is for bulls and bears to position accordingly. I mean, when you have a very clear support line like this, all you have to do is break down through that support line, and then people say, that's it. Oh, it's broken. Stop loss getting hit. People are selling. And then all of a sudden you just move it back to the upside, and that's like your throw over. That's exactly what this is, a throw over. You move it all the way to the top, push it above as high as you can push it, and then dump into that. And then look how much momentum it gets to go to the downside much lower. So we have to be very careful of that taking place right here. But, you know, we don't want to get overly bearish at the top of a range when we start to break out on gold. Silver is doing the exact same thing. You know, we had essentially, like, you could argue that the red line is the top of like the channel, the blue line is the bottom of the channel, and we're in like a descending channel as well. I see it more as like a sideways consolidation pattern where we have like a very clear multiple bottoms and very clear multiple tops at 30 bucks here. And then we have essentially inside of that pattern, like this red descending trend line, which we topped here. We got that push out of it, but it was obviously not sustainable. We consolidated above it here, obviously not sustainable. Here we are again at the top of the range. You know, are we just going to put in another series of lower highs and then sell back down to that same low again at like 2250, I think that's more than likely what's going to happen. But we are at the top of, the trend line. We're also above our little green dotted line right here, which is essentially the heart line of our sideways channel. So could we find support right here? For sure. But, look, once again, we've lost the bullish control zone. We're getting ready to get the Stoch cross to the downside, hard style signal, red histograms, red slope line, all-time highs on, premiums over spot. I don't know. We'll have to see. Gold to silver, ZAO to ZAG. We broke out of essentially this descending triangle pattern. Got the breakout, and now we're just consolidating. Now the real question is, are we going to get a powerful move back up where it takes more silver to buy gold or less gold to buy silver? Or, is this just going to break back down inside the pattern and silver is going to continue strengthening in comparison to gold? Because that's all this is really telling us. The relationship of strength between silver and gold. So typically when these markets move, silver moves exponentially percentage-wise in comparison to gold. Gold moves 1%, silver moves 3%, roughly, in the same direction, usually. But we'll have to see now, because if gold starts to strengthen and silver starts to strengthen, you would expect for this to go down. If gold starts to weaken and silver starts to weaken, you would expect for this to go up. So this chart tells us that if this is a confirmed breakout and that we're right on this, more than likely what's about to happen is gold is going to go up in relationship to silver. So that relationship is important because that means that the direction silver is going in and gold is going in, if it's the same, is probably going to be to the downside. Because if it was going to go to the upside, silver would probably go up more than gold. Therefore, this chart would continue to sell off. It would continue in this downward spiral, because here it took 120 ounces of silver to buy 1 ounce of gold. Down here it took 60 ounces. So you would think the breakdown would be like a reversion to the upside, up as high as like 80 or 90 ounces of silver to buy gold. Therefore, what would cause that to happen? Gold price going up and silver price going down, or gold price going down and silver price going down faster. So that's why this chart is so important to pay attention to, because it's the relationship, in the same way that you look at like the DXY for the relationship of the dollar in accordance to other currencies. Because if you look at the relationship of the dollar to like actual assets, you're going to get a completely different picture than if you look at the dollar compared to currencies. Because things like, for instance, Europe opening back up and being behind on vaccinations would explain why the dollar has been strengthening, and then all of a sudden Europe opens back up. They start opening back up like, weeks or months after the United States. And then all of a sudden you see the dollar weakening in relation to the euro because they're back open again. So they're seeing like that reopening boom. Platinum is next. Platinum is looking more and more like it's putting in our base right here. We had talked about potential opportunity for it to come down slightly lower. But over the last week, basically, it's just kind of crept back up, inside of these key levels, obviously, and what's going on and all the longer term stuff we've been looking at. We're very clearly putting in a series of higher lows. So as long as we continue to put in a series of higher lows, and then obviously, we're just developing basically this little channel right here. So that's what we're paying attention to now for platinum. We are obviously, in this case, I'm actually going to leave this on here, so I'm actually going to make it look a little better. So, what we're expecting right now, basically, out of platinum is essentially, when we're at the top of the range, we would expect it to move back down to the bottom of the range. When we're at the bottom of the range, we would expect it to move up to the top. So we can pay attention from here and kind of see how that plays out inside of this range. So, we're getting close to, we basically topped out with that wick at the top of the range. But, it looks like we may push up here higher. And then, we would just assume that it's going to move back down to the bottom of the range until finally we get a break in one direction or the other. So, and obviously a break of this channel is going to mean it's probably going to hit our target down here. A break of the channel to the upside means it probably already bottomed right here. And, we got maybe a little too greedy expecting, another, it's like another $20 sell-off. It's not like a big deal or anything, especially on like a $1,200 asset. But I expect this thing to come back into line with gold's price very soon. Uranium, URA, this is the mining ETF. Showing some weakness at the top of the range. We have that triple bearish divergence, playing out right here. All it really has to do is go sideways to invalidate or to, have this bearish divergence play off, typically you will see like an actual sell-off. We did get the 821 across the downside. Looks like we're getting rejected by the 8. We're still finding support at like the 50-55 here, but I think more likely than not we will see at least a small sell-off in this down to like 1745, or if it gets real violent, maybe down to like the 1550 range. But I wouldn't hold my breath on uranium, like one move or the other. To me, this is a much longer like trending market. I think the uranium bull market will probably last like 10 to 15 years, from now or from when it started, a couple weeks or months ago. So in all reality, I would expect this thing to play out over, a decade. Therefore, we could go sideways to down for like a year and it wouldn't be a thing. This is definitely like a set and forget type situation in my opinion. SILJ, this is the silver junior miners. We spoke about this specifically and, what I was really paying attention to, and I didn't like the overall look of this because, we got basically like a confirmed breakout right here that failed, a very clear breakout right here that failed, a very clear breakout right here that failed, and it looked like we were trying to break out again. And, based on previous experience in this triangle, more than likely it's going to fail. Now, of course, when it does break out, we have some positions here for nice little trades to the upside. But, I would much rather buy the bottom of the range. I would much rather buy the support that has acted 1, 2, 3, slightly there, 4, 5, 6 times in a row. You could have bought this support on the top. And, obviously you wouldn't know the first time, but, that was a failed breakout 1 time, 2 times, 3 times, 4 times. So, statistically speaking, if you took a long off the bottom and a, short or sell off the top, you had 10 successful trades in a row before, eventually it fails. But, the meat on the bone is getting less and less and less. We are at the top of the bullish control zone. We are at the top of the range. And, statistically, the last one time it happened here, one time it happened here, one time it happened here. And now here we are, bullish control zone, top of the range. More than likely you would think it's just going to sell back off again. So THCX, this one is just one of the cannabis ETFs that I look at. It's got like some of the more popular names in it. You can obviously look up what it is, but just a little more diversity versus investing in just 1 or 2 specific cannabis stocks. But, we're back down we're at key levels for cannabis industry right now. We're back inside the bearish control zone for the second time since we topped out right here. We're paying attention to some of like the individual stocks are showing divergence. Bullish divergence. Some of the ETFs are not, which is why I've been looking at the ETFs lately because they're giving us a little more clear of a picture in my opinion. Some of the cannabis stocks are below the 200 moving averages. Most are above still. So again, the ETF gives you like a little more accurate of a picture. But we are seeing multiple green histograms in a row. We are about to get this cross, the hard buy out of the bearish control zone. So, there's definitely some potential. This thing is carving out a bottom right now, but it's just a little too early to get aggressive on these. Once again, for something that I think is going to be like a multi-year bull market. And, I think these ETFs or a lot of the Canadian stocks are really going to last for year after year because I don't think the United States is going to like federally or in all 50 states like legalize marijuana anytime soon. So I think it's very unlikely that we'll see a, American public listings of cannabis related companies or industries. Therefore, I think it only makes sense that the Canadian ones would strengthen. And obviously, like I'm bullish on the overall industry itself, just because, they're easing regulations and taxing it and using the tax money to fund schools and stuff like that. So definitely makes sense to me. YOLO is another one, another cannabis ETF. Chart looks very, very similar, obviously, very similar. We can see like a couple minor differences, but overall giving the same picture. I'm obviously very bullish on this overall, but once again, we can see a very clear pattern is forming right here. And so when we break out of that pattern in one direction or the other, we can take a like much more accurate or educated guess at, is this it? Are we going to now reverse the trend and move back to the upside? So we're not just trying to call the bottom every time, but this is giving us something, again, depending if you're going by wicks, what time frame you're looking at. This basically just looks like, this was like an overshot sell, just lack of liquidity, or somebody just like fat fingering a sell, breaks out of our pattern. But overall, we have a very clear pattern, and typically like after a long run up, a descending wedge or descending like triangle like this is going to sell off, sell off, sell off, run out of sellers, and then break to the upside. And often it's coupled with bullish divergence, which we're seeing in the individual cannibal stocks, but not in these. So depending on what you're looking at, you might be getting a different picture, but I think it's just a matter of time. And as you can see, the range is tightening and tightening and tightening. Eventually, there's nowhere to go but a break in one direction or the other. So Caterpillar, we were looking at this one again on the divergence that had been playing out. We had quite a bit of bearish divergence, showing up on the chart itself, and basically like 3 drives of bearish divergence here on the daily at the top of the range. We had anticipated it topping out at our green Fibonacci level right here as well. So, this looks very likely that we're topping out here. We could easily make it up to like 245 bucks, hit that next fib level in orange there, and then see like a pullback. But, the main thing I'm paying attention to in this is, obviously fundamentally very, very bullish. Technically the actual chart looks very, very bullish as well. It's very strong. You're basically getting something like this where you have a very key support line here on the bottom that's been playing out absolutely phenomenally every time it gets even close to it. And then you have, what you could argue is a resistance line like that we've already kind of broken out of to the top, or you could draw it a little bit more like that, or you could, sometimes the first little bit will overshoot and then you'll get like a more accurate picture. You don't have to draw these things perfectly, and it's not about being right. It's about doing what everyone else does, because that's the idea of charting, is that you're looking for what other people, bots, algorithms, traders, investors might be looking at as important levels. So to me, this is basically like an ascending wedge. It's tightening, but it's almost a channel even, but not really. It's getting slightly tighter and tighter. So eventually you would expect a break in one direction or the other. Typically when a pattern like this breaks, it will break to the downside, and what would be like the indicator of that break is essentially if we lose the blue support line right here. So that's what I'm paying attention to. But again, if you put this into place back here and use that as your support, the next time we got close to it, you could have bought it. Next time we got close to it, you could have bought it. And now here, theoretically, you just buy it again, anticipating that it's just going to be support again and move to the upside. And then once again, the one time when you're wrong, the one time when it breaks, you're already positioned, you get stopped out, and then you can, obviously re-enter at a lower position. So, but assuming this was the top right here, and that was our bottom, that's the green fib levels right there, I would expect us to at least come down to the 0.236. So 188 bucks, or even the 382, that's like typically the lowest you want to go in like a very bullish market. So that'd be closer to like 164. So this thing could take a definite hit. But again, overall, I'm bullish on Caterpillar. But a lot of it depends on infrastructure. What happens with the economy? Do we actually start building stuff, or do we just keep pumping out stimulus that does nothing? Because like right now, what's happening around the world is they're just plugging holes. Well, you don't ever get anywhere if you just plug holes. You just stop from sinking. We need to like actually like build infrastructure, create jobs, like change the mentality of the people again. I think over the last like year, we basically have like trained people. I don't want to like target the younger generations, but they're notoriously lazy. And then on top of that, we've been basically like training already like lazy, lack of motivated people to like not want to go to work. So how hard is it going to be to get people to like re-enter the workforce? I mean, I'm sure everybody's been hearing about like, sign-on bonuses to go get a new job that normally wouldn't have a sign-on bonus, or paying you just to do an interview, which if they're paying you 50 bucks to get you in the door, it's because they're going to hire anybody. But I've seen this firsthand. A lot of local businesses or whatever are having difficulties finding people to work because you lose your benefits. So if you're going to lose like all the free money that the government's giving you, why would you go to work? Even if you're going to make slightly more money, why not just stay home for free and do whatever you want in your spare time? Because maybe you're like creating a business in your spare time, or maybe you're just getting really good at video games, or learning a new skill optimistically, or just spending time with your family. I don't know. Depends how you look at it. But this was an old specific example I gave a while back when this all started. I said, look, you got 3 kids, okay? They're sitting on the couch watching TV. And you go up to your 3 kids and you go, hey, one of you guys needs to unload the dishwasher. Like, one of them just going to volunteer or whatever? No, probably not. So you incentivize them to do something positive. So you say, hey, you're getting that allowance of 20 bucks. One of you's got to unload the dishwasher. So, one kid goes, unloads the dishwasher. You're good to go. then, you know, you tell the other kid, you're getting $20 allowance, go load the dishwasher now. He unloaded it, you load it, it's only fair. Well, if the third kid is getting an allowance to do nothing, eventually after a while, you know, you're giving the kids the same allowance. Like the other two kids aren't going to want to do anything either. And then eventually after a while, none of them have to do anything. You're just going to end up with a bunch of lazy kids that expect handouts. And that's like literally what we've done to the economy. You know, we basically said like, hey, you don't have to worry about doing your chores anymore. Don't worry about going to work anymore. Don't worry about paying your bills anymore. Don't worry about earning a living anymore. Don't worry about being a positive contributor to society anymore. Like, we understand it's a rough year. It's a pandemic. There's a lot going on. You know, take a year off. But like, you know, we'll go back to normal after that. Well, you're going to find it's very hard to get those kids up off the couch after a year of getting used to not doing anything. So we'll see how that all plays out. So here we have our Bitcoin chart. Obviously sold off over the weekend down to like about 47, 46K, something like that. And then we got our pushback to the top of the range now that's taking place. You know, just lining back up with like spot and futures. But this is a very good example of what we're talking about. When you have a very clear trending support line, you can get a situation like this where you break out the bottom, but then move back in it. You save the trend when you come back up to retest it. But, you know, very clearly we have this blue support line that's been holding Bitcoin price up. And now we have broken down from that trend line. So if you look like at the next trend line that's relevant, our next trend line that's going to be relevant is from the bottom back down here at like 5,000 roughly, depending if you're going by like candle closes, to our next bottom after that head and shoulders sell off, which was like 10,000 right here. And then, you know, obviously we have a couple key points right there, a couple key points along the way right here. And then, you know, potentially could sell off all the way back down to that. That also sort of lines up depending with when we get there, you know, with this previous like support area right here, or, you know, potentially with like the previous resistance area right here. So, you know, we got to look at now, depending how long it takes to get there, you know, are we going to get there at 40,000? Are we going to get there fast and it's going to be at 30,000? You know, is that going to hold when we get to it? Are we going to retest the blue trend line that we broke down from first? You know, these are all things that statistically characterize a market and you see very often. So it's not unrealistic to think that we're going to break out of this little descending channel that we're in, move back up and retest the high, you know. But as far as I'm concerned right now, this is our triple bearish divergence playing out. So, you know, it's just a matter of how far it's going to play out. And I know people are already saying this is the bottom, it's done. You just sold your Bitcoin to somebody else, or, oh, this is the top, it's done. You know, sell your Bitcoin before it's too late. But the truth is, no one knows if this is the top or the bottom yet. All we can do is like look at the probability of it and look at what the market's telling us. So what we're paying attention to is now here on the 4 hour, you know, what's going on right here. We have that very clear bullish divergence, you know, between these 2 points right here, between this point and this point on the 4 hour. You know, we have two very clear areas where there was more selling taking place than buying, more selling taking place, more selling taking place. That was at the bottom of our 2 pushes right here. So now that we're back at the top of the range now, we just see, are we just going to get rejected again in a series of lower highs and then move back down? Or are we going to get a breakout and then, you know, potentially get that measure move to the upside? And, you know, I talked a little bit about this in our last session, but I expect after this much of a sell-off, we will, like more often than not, we'll see like a burst back to the upside as, you know, either people push the prices back up so that they can exit positions, or, you know, now they're bullish because they got a good deal. We just have to see how it's going to play out. You know, you can't just sit here and act like you're always right on if it's going to go up or go down, because, you know, the market decides that. You know, it's all about more buyers and sellers and, you know, confidence. So if like the S&P starts crashing, you know, obviously Bitcoin's going to crash as well. If Bitcoin starts rallying and the S&P is rallying, you know, obviously we're going to move back up. The question is, are we going to develop more patterns? Are we going to put in higher lows, lower highs, etc.? So, but as far as I'm concerned, you know, the momentum to the downside is starting. It's starting to wane a little bit. This is back on the daily now. You know, you'll notice here we went from a bunch of red solid bars in a row to now some more orange than red. So here we had 3 reds in a row, then an orange, then 2 reds, then an orange, then 1 red, and now we have 2 oranges, and the volume's starting to taper back off here. So, you know, obviously we still have plenty of time. You know, this is a brand new daily candle right here, but, you know, essentially if we continue moving to the upside, that break's going to look very probable. But if this one just flips over red again and we start selling back off, it's going to look like we're still strengthening to the downside. So you don't want to get ahead of this thing, obviously. But, you know, we are starting to see signs that, you know, this is bottoming out, at least for now. So let's switch over now just to look at a couple different indicators. You know, we got the 821 cross back here. It was very obvious. Like, that was like, you know, basically a key level that we were paying attention to. You know, it's the last few times we averted that. That was our bearish divergence playing out. We are now back inside the bearish control zone. The last time we were inside, they, whoops. I did not mean to do that. The last time we were back inside the bearish control zone was back here after the head and shoulders sell-off. And that was at, you know, 10,000. So we went all the way from 10,000 to 60,000. We had these big pullbacks in here and smaller pullbacks, and we never made it inside the daily bearish control zone. And now here we are in the bearish control zone. So is that a change in structure? Yes, 100%, because we did something we have not done for months and months and months. And since then, price action has gone from 10,000 to 60,000. So the price went up 6 times. It's 6x'd. And now we're having something happen that has not happened for a while in these markets since that 6x move. So does that mean that just like here, we're going to rally back up and keep moving to the upside? There's definitely a possibility. Does it mean also that the trend is topping out and we're going to go to the downside from here and we're going to have a, you know, long sell-off? Maybe, but we don't know yet. We have to wait and see. But there's definitely signs that the market is changing. We'll notice also here, before we go over to the futures chart, we are well below the 89 and closed below the 89, opened and closed below the 89, and then open again below the 89, and now we're pushing back up trying to get above it again. So if we close today in the next 24 hours back above the 89, this is going to look more bullish. And this is what I was talking about, you know, that we've basically saved the 89. And this was the importance between the Bitcoin futures chart that I was talking about specifically, is we still had a way to go down to get to 89 here. So if we all of a sudden save our price action right here and continue moving back to the upside, it's going to look like the 89 saved us. You know, here it looks like a slight overshot, but the 89 saved us. Here it looks like sort of a front run. So paying close attention. You know, bearish divergence has played out potentially, but could continue to play out also. We got the hard sell now. We're leaving the bullish control zone here for the first time. We've got the divergence signal. This is on the weekly futures chart. We have multiple red histograms for the first time, you know, since back here at 10,000. There's a lot of stuff telling us that this is potentially the top for now. Maybe not forever, but for now. It's telling us this is very highly likelihood that this is the top for now. Does not mean we can't move up before then, though. But what it says is we would move up to a lower high, most likely. So, and now here we are again, the weekly bearish divergence signal. You'll notice we've had multiple red histograms on the weekly here. You know, we still have a ways to go before we touch the slope line down here. So we could very easily see a heavy sell-off. I do expect us to hit the 21-week and the parabolic SAR one way or the other. So I do expect at least a touch of 45,000. But again, we could move up to 55,000 and then back down to 45,000. It does not have to be all at once. I think more than likely we will see this weekly candle above 53,000 at some point in time, and then a rejection wick get left behind, or down to 45,000, and then again a rejection of lower prices wick, like a bounce off of the 21. So me personally, I'm looking to buy this 21 moving average, but I'm going to look at what the price action looks like when it gets there. But again, if you move back to the upside and, you know, you're holding spot, maybe a good time to cover your spot if we do start moving to the upside. And then if you're wrong and we continue to the upside, it takes you out of, you know, that short position. So, but you're basically just hedging. But again, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Just don't want to be that guy who rides Bitcoin up to 20,000 and then doesn't sell, and then it goes back down to 3,000, because you could just buy 7 times as much Bitcoin at the bottom, or 5 times as much Bitcoin along the way. So Dogecoin, you know, we talked about this. Doge got the hard sell. selling off. Now it's basically going sideways. From the hard sell, it got a massive wick back down to 16 cents. Obviously, that would have been a great buying opportunity. But did it stop based on any specific thing? Could you have known that 16 cents was going to be the bottom? No, I think more realistically, you got in probably about 20 cents here at the 21 moving average. But we are below the 8 now. This one is overall more bullish than most markets are. But again, bunch of red histograms in a row. Hard sell signal. Stokes are cross to the downside. We're below the 8 moving average, but we don't have the 821 cross yet to the downside. So again, Doge is more bullish, but only because after a parabolic move like that, it takes longer for those like oscillator indicators to like sort of get the cross back down. So Ethereum, still looks fairly bullish. Has not crossed back down to the downside yet. Starting to roll back over the stochastics. We're starting to see a little bit of life coming out of this thing on the TJD, TDMACD. But again, we hit our target back up here and got a mass rejection. I would expect this to continue seeing rejections. If we do take out on a daily close 2,500, that would change my mind. But for now, I don't think ETH is just going to all of a sudden start running to the upside, unless Bitcoin does. And I don't see Bitcoin making new highs anytime soon, without us getting some kind of signals before then. Cardano, ADA, 821 cross to the downside. Found support basically like with this wick right here, this wick right here, and this wick right here, all off of the 89. This obviously looks like shit. Here's a perfect example. If you look at, if you want to look at the strength of something, let's go from our absolute wick on Ethereum to our current price action. Ethereum is down 8.75% from the absolute top to now. And if you look at the sell-off that took place since the top, it went down 20.4%. Bitcoin is like between 20 and 29%, something like that, depending on the exchange, etc. Cardano, from the absolute top to the bottom wick right here, went down 40.5%. 40.5%. And then from the absolute top to where it's at right now, Cardano is still down 27%. So this is obviously a total piece of shit. Yeah, it's junk. It's trash. Why is it selling off so violently when like other cryptos that literally do nothing that are like a year old are stronger than this? XRP, let's look at XRP. About to get the cross to the downside, 821 cross. Let's do that same little comparison from the top of XRP, which is not even an all-time high. So it waited 4 years to get back up to $2 from its previous all-time high and could not even get to a new all-time high. And now here it is, from the top to the bottom, it went down 55.9%. So it went down 56%. And from the top to the price right now, it is currently down 44.5%. That's absolutely horrible, extremely weak. I think probably a lot of people are using this opportunity as the time to get out of some of this junk, because they're realizing if I would have been invested in anything else this entire bull run, I would have done better than XRP. And with the exception of if you bought the bottom on Cardano at I think it went down to like 7 cents this year or whatever. Yeah, from 7 cents it did great. But from its previous last all-time high, how much did it go up? Like 30% or something? That's weak. That's extremely weak. But again, I'm always a proponent of longing the strongest and shorting the weakest. You just still have to pay attention to when you're going long on the strongest and when you're going short on the weakest. But overall, not good. Neither one of these is good. They both have a large hype train behind them. And if that hype train ever goes away, they're going to be in some serious trouble. All right, so XRP, let's go on to Riot now. Riot broke down from key support at the end of last week and moved back up to retest it as resistance. Closed exactly at it. It is possible it opens back inside here, moves back up, But, you know, there's no meat left on the bone inside this trade right here. We have to wait for what happens. It is back down in the bearish control zone for the first time, you know, basically since the absolute bottom on this thing back at, it was at 50 cents. It was at 50 cents a year ago. And from 50 cents, it went up to $80. So, I mean, I don't want to be standing in front of this freight train when it comes. Because if this thing dumps, it's going to dump bad. And it looks like it's breaking structure right now. Now, again, you don't want to get too far ahead of the game here, but it looks terrible. And then also MicroStrategy. We talked about MicroStrategy. We talked about the premiums on GBDC and MicroStrategy and how they'll probably never be achieved again, at least not in the current bull market or bull cycle. But this thing, once again, down at the bottom of the range, potentially breaking, you know, key structure here as well. You know, GBDC is trading at a 17% discount, or was. MicroStrategy is probably still trading at a premium compared to what the Bitcoin is worth that it holds. But if it ever starts trading at a discount compared to the premium that it still holds, it would actually make more sense for people to just buy MicroStrategy because it's at a discount than it would to buy Bitcoin. So it's actually cheaper to buy MicroStrategy if it was at a discount. And the same thing is said for GBDC. Now you have what's supposed to be, you know, bullish case for Bitcoin. It's trading at a like discount, even if it was 10%. If you could buy one Bitcoin for $50,000, or you could buy the equivalents in one Bitcoin worth of GBDC for, you know, $10,000 less, why wouldn't you buy GBDC? You would, unless people don't believe in it again, which explains why there's a discount. People are trying to rush to get out of it. But now you have essentially a competing factor. Now people, when they go to look to buy Bitcoin, they say, well, I might as well buy GBDC because they're going to back at 1-to-1 with Bitcoin and it's trading at a discount. So now you have the stock that is supposed to be bullish, or the index, or whatever you want to call it, you know, the fake ETF is now competing against the underlying asset. So now you're taking potential fuel out of Bitcoin's gas tank, and then you're putting it into something else's gas tank. So Bitcoin can now go less far and less fast. So you got to be careful, because a lot of times what should be a bullish case or help a market can in fact end up hurting it. So, and then here is Coinbase. Coinbase, we talked about this specifically. I've been expecting it to sell off. You know, we got down below the 1.618, 287 was our first target. We stopped right at the 1.5, 291. I still expect this thing to sell off further. I still expect it to get back down to, you know, maybe the 2.618, $255. Could it go lower? Yes. Does it have to get that low? No. But I think it's more than likely. You know, all we've done is sell off since the listing, direct listing. And, you know, this last candle sold off here bearishly and then moved back up, but didn't even take out the low of the previous handle and got like a fairly strong rejection wick to the upside. So I think more likely than not, we'll see continued selling throughout the coming days / week. But this is our first week of Coinbase, and it looks absolutely atrocious. And of course, in accordance, crypto topped out like over the weekend, right before this. So once again, buy the rumors, sell the news. This was a huge event. Everybody was hyping up Coinbase and how much money it was going to make them and how it was going to shoot crypto to the moon. And in all reality, all that's happened since then is go down. So that's a perfect example of buy the rumor, sell the news. Once again, does it mean Coinbase will never be worth more than its IPO price? No, I think it will eventually. It's a good business. You know, will it be this cycle though? I don't know. Same with Bitcoin. You know, will Bitcoin ever be worth $60,000 a yen? Yes, I think it will. But will it be this cycle? I don't know. I don't know. Statistically though, every time Bitcoin tops out, it eventually takes out the top again. So I'm going to jump over to comments and see what everybody's got to say. I don't know if I said it at the beginning, but I'm going to keep this one relatively short today. I've got a few things to do. This is a big week coming up. I expect massive volatility throughout all these different markets. I'm extremely, extremely excited to position myself with some of the various assets that we've been taking a look at, as I think we're going to see some explosive moves start to happen here. Bubblies, what's going on, man? Good to see you. Good to see you as always. too low. Sup, y'all? Week of hell is over. Too low says moon rocket thrusters initiated. T4 hours until takeoff. Yeah, I mean, rocket to the upside or to the downside? I'm not sure which one you're thinking. It sounds like you're bullish, man, but you know, just be careful. I would be very careful in these markets picking a direction right now, because if you're going to pick a direction, the direction is down. Everything is pointing down right now. You know, on crypto specifically. We crossed the 821 to the downside. The 4 hour is still angled to the downside. The daily is angled to the downside. The weekly is telling us we're losing momentum at the top of the trend. We're in the middle of bearish divergence playing out. We lost a key support level, on our daily, and we've broken down from it. So that's a lot of things saying down right now. We have a change in structure. We have more buying than selling than buying taking place for the first time throughout this entire trend. So I don't know, man. I'm not 100% sure that it's thrusters to the moon. We might have some inverse thrusters, like when you shoot a rocket up in the air and it no longer has a thrust to keep moving up. It like rolls back over and starts pointing down, and the thrusters are still kind of burning. So maybe it shoots it down some. Maybe those thrusters, but I don't know. We got to see. Yeah, CW says, I smashed the like button. Good looking, my man. Appreciate that. Supernova, what's going on, brother? Yep, everything going well, man. Going well. I'm excited for this week. We're at such a key inflection point in the markets. Obviously, I was telling everyone I thought crypto was topping out at least temporarily at like 60, 65,000 in there. I expected that pushback up at least to 62 and then to new all-time highs. So you guys know how I feel about all that. And obviously I was right. But we're at that point now where the question is am I right about the treasury? Is it going to go sideways and then, burst up to 2%? Am I right about the dollar? Is the dollar going to find support at this key level and move up, or is it going to break down and we're going to get that massive move to the downside? There's a lot of, and those two things will highly affect what's happening in all these other markets. Because if crypto still keeps selling off, I would expect that traditional markets will be as well, and that was like the front run. If crypto keeps bursting to the upside with traditional markets, then maybe it was just, a little liquidity event correction based on like the buy rumor, sell the news. But in all reality, we're at an inflection point for a bunch of different markets. And like we've got cannabis stocks potentially bottoming out. We have silver and gold potentially topping out in the short term or breaking out of a consolidation pattern. We have a lot of the tech stocks potentially breaking out of their downward consolidation patterns and ready to start moving back to the upside. Lot of interesting price action taking place. We just got to see where it all plays out. And there's going to be a lot of people rushing in and out of positions as the volatility increases. So we'll pay attention to like the VIX as well and see what that tells us. And, just kind of pull this chart up here real quick. Matter of fact, I'm going to grab both these charts here. So we haven't taken a look at these recently. Well, somewhat recently. Here's our Bitcoin dominance chart. And, obviously 1, 2, 3, 4, 5 topped out, and then I was anticipating the A, the B slightly higher correction, and then the C, and I have the C drawn into a pullback to the 0.5, which is from the bottom of the range to the top of the range. So that would be a pullback of 50% of the move up. So what does this tell us? In many ways, it's the same as the gold-silver ratio. Gold being Bitcoin, silver being altcoins. Okay, so on our gold-silver chart, the relationship is as this strengthens, as the dominance strengthens, it means Bitcoin is stronger because it's going up faster than altcoins, or it's going down slower than altcoins, or Bitcoin's going up and altcoins are going down. So as this has been weakening now for week after week after week, this is a weekly chart. It's been going down for months now. Are we going to get another bounce like this off of that key Fibonacci level at the 0.5 like I'm anticipating? And then we're going to actually see continuation to the upside from here, like take out the previous high and move back up to retain Bitcoin dominance. What does that imply? It implies Bitcoin is going parabolic faster than altcoins, or it implies that altcoins are going down extremely fast and Bitcoin is going down less fast. But I think that this was our 5-wave structure playing out absolutely beautifully. This was our ABC correction playing out absolutely beautifully. Could this play out further down to like the 618? Yeah, it definitely could. It could go down to the 618. Could even go down to 786. I doubt it, but even if we saw it come down to the 618 at like 47 versus basically exactly where we're at right now, I'm expecting it to bottom out somewhere in this area. And what does that mean? What's the big picture? But what does it mean? Like, I hear what you're saying, but what does it mean? That's the most important thing. What does this actually mean? Well, it means that if I'm right, and this is going to continue to the upside, that if our initial 5-wave structure topped out here, that would be our 1, and then this is our 2 pullback, and then the 3 would put in a new high and be roughly, a fib extension of the previous wave. So if this was our 1, and that was our 2 pullback, and then our 3 was to a new high, this would be basically our 1, this would be our 2 pullback, which is potentially completing, and then we would have a 3 to a new high. So if that takes Bitcoin back up to like the 90% range or something like that, that's going to be from 50, or even if it takes it back up to like that top level at 75, it's going to mean altcoins are getting absolutely destroyed. So we need to pay attention to that, as Bitcoin has been basically going sideways or losing market cap, as a lot of these altcoins have been going parabolic, which often is the top of a short-term or long-term trend or market cycle. So that's what this looks like to me. And it's important the same way as I'm seeing gold and silver at the top of a range, potentially getting ready to either break that range or sell off. Well, what clue does the gold-silver chart give us? The gold-silver chart is giving me a clue that gold is about to strengthen compared to silver, which means most likely they're going to go down. The same way this Bitcoin dominance chart is giving me a clue that we have been selling off in Bitcoin, strength to altcoins. So we're more than likely getting ready to bottom out at a key Fibonacci level, implying that we're going to see Bitcoin strengthen compared to altcoins, therefore giving me a clue to the overall direction of the market is, even as this mass sell-off was happening, even as we had this capitulation the last week in cryptos, and we had things like XRP 50% down from its high, Cardano 50% down from its high, Bitcoin down 20% from its high. But what happened? Did Bitcoin lose strength this last week? Yeah, it lost a little bit of strength compared to altcoins. That means the sell-off didn't even scare people out. And I don't care if you argue XRP and Cardano are great shit coins. That's fine. You can love them. I don't care. That's totally cool. But what this chart is telling us is that of all the altcoins in the whole market, that the altcoins sold off less proportionately to Bitcoin. More money stayed in altcoins. Less money flowed into Bitcoin. So what does that tell you? It tells you people aren't scared to hold altcoins right now. Well, that usually happens at the worst time. And this is implying that we're potentially going to see a change in structure, a change in trend. And then we pay attention to, where was our low at previously? Where's our low at now? We're basically at that same level again. Where's our low at here? Where's our low at here? Much lower. What is that? It's weekly bullish divergence taking place. Where's our low at here? Where's our low at here? Much lower. So that's giving us no divergence between these two. So, we're potentially seeing bottoming signals, but we could also just continue down, and it invalidates that bullish divergence. And then, maybe we hit one of these other fib levels. Maybe I'm wrong. Bitcoin dies completely. No one wants Bitcoin anymore. Everybody wants altcoins, and, altcoins go to the moon. Bitcoin goes down to, a new low. Last run, it was at 35% of the complete market cap. This time it's at 50 still. Maybe it goes down to 20%. What does that mean? It means alts go parabolic and Bitcoin dies. Not dies, but it gets very sick. Total crypto market cap is another one. Indecision candle at the top of the range. I said very likely. I figured that this was at least a temporary topping point based on, previous experiences. When we saw this bearish engulfing candle, we then sold off to the 21. Here we saw basically a, somewhat bearish candle, indecision candles, sold off back down to the 8. Here we saw bearish engulfing candle, found support at the 8. And then here we basically are losing our strength to the upside. We're getting our weekly divergence signal, the buy at the top of the range, with the sell, buy, sell, and then getting ready to leave the bullish control zone here. And then multiple red histograms in a row for the first time since our previous top out here. At 366 billion in market cap. So we moved up to $2.3 trillion, and then we moved down to, it was like $1.6 trillion. So we basically lost $70 trillion. I'm sorry, billion. $70 billion in a week. 700. Jesus. These numbers are so ridiculous. We lost $700 billion in market cap in a week. I mean, that's scary if you look at it. That's pretty violent. 28% sell-off across the board in the week. And Bitcoin didn't even stay stronger than most altcoins did. I mean, that's how you know that people are overly bullish in altcoins and underly bullish on Bitcoin right now. So you could argue that's telling us a couple things. But we did get our parabolic SAR flipped over red for the first time since back here at 386 billion. So what happened like that last time? We were in the bullish control zone on the weekly. We got the hard sell. We flipped over the parabolic SAR. We went sideways for, 2 months. So the same exact thing happening now. Multiple red histograms, hard sell, leaving the bullish control zone, flipped over the parabolic SAR. So maybe we just go sideways for 2 months. That's not so bad. Maybe we come back down and touch the 89. 1.45 trillion. I mean, are you ready for that? What is the market going to look like if we pull back to 1.5 trillion? How much of that's going to come out of altcoins and how much of that's going to come out of Bitcoin? Because right now people are buying the dip on Bitcoin and altcoins, saying we're going back up, still an uptrend, best chance to buy, don't sell to the whales, hodl, diamond hands. That's all the stuff people are saying right now. What are they going to be saying if all of a sudden we lose another $400 billion in market cap? What are people going to be saying? I don't know, but probably not the same things. Probably not going to be talking about diamond hands. So we'll have to see. We'll see how it all plays out. But I wanted to bring those two charts specifically to everyone's attention. As I do try to look at those. I look at them every day, or at least once a week or whatever. I always have them up. But I like to bring them up, obviously, on the videos as well, so we can kind of keep that in perspective. And then it's obviously like a very good comparison as to what's happening with gold and silver, and then the relationship between gold and silver, because it puts it into perspective with Bitcoin and altcoins, and then the relationship between Bitcoin and altcoins, and what that chart is giving us a clue on. Because maybe that chart's not right, but it's giving us a tiny little clue. And if we can use that clue to gain a tiny little advantage on the market, well, that's what this game is all about, having an advantage. So, but yeah, I think that's going to do it for today, guys. Keeping it, like I said, relatively short today, as I do have some stuff to do. Just a nice little 1 hour stream. Some people out there might appreciate that as well. So, but I do appreciate everyone that tuned in today for the stream. Good to see you guys in here. Definitely appreciate all the positivity and, all the regulars coming back, commenting, liking the video. Subscribe if you haven't already. I'm sure most of you guys already have, but I appreciate it if you share with your friends on social media or whatever, as I do not use social media, so I lack that ability or choose not to have that ability. But, this week is going to be exciting. I think that this is probably one of the most exciting chances to be alive in the markets. There's so much stuff going on with all these different markets, with their correlation, with everything changing so quickly right now. There are definitely fortunes to be made and lost. So for a lot of people, I think, they're all their eggs in one basket. I don't think that's necessarily the best idea. I think diversification, protect your principal, protect your capital. If you've already made money, make sure you take them profits. Profits aren't real unless they're realized. Diversify into hard assets. Pay down high interest debt. If there's free money out there, take it. That's the best thing to do, in my opinion. If you can get loans at 0 to 4% for 30 years, I mean, makes perfect sense why there's so much extra liquidity flooding into the markets right now. You'd have to be crazy not to take a bunch of free money that you don't have to pay back for a long time at a super low rate. But when that starts to dry up, what is that going to mean? What's that going to change? How is that going to affect demand? If all of a sudden today, right now, if just all of a sudden I snap my fingers, boom, snap my fingers, and the economy was started back up, all the factories were back open, all the businesses were running at full capacity again, everything was back to normal, and it was just game on, would we see this inflation still taking place? Would we see prices going up on things? Would we see all these different assets at all-time highs? If there was a normal amount of people selling their houses, a normal amount of people buying houses, if everything was just normal right now, grocery stores, supply chain constraints, if all the car dealerships had all the cars that they would normally have right now because there wasn't semiconductor shortages, if all this stuff was taking place, would we be seeing massive inflation right now? Or would it be evident that there's deflation taking place? Because the way I look at everything right now is if there wasn't supply constraints, if there wasn't bottlenecks in the supply chain all over the place right now, we wouldn't be seeing inflation. Because the inflation that we're seeing is because of lack of supply, in my opinion, or increased demand proportionately to the supply. If no one's going to work and making shit, but everybody still has the same money that they would have earned going to work making shit, so they still have all the money to spend, they still have all the demand to buy it with, but there's no supply because nobody went to work and made the shit for the people to buy, what's that going to cause prices of the stuff? The stuff's going to go up in prices because there's still people who want it, but there's nobody making it. Well, that's unsustainable. So it can't go on forever. Therefore, it will not go on forever. So that's what's happening right now. There's a bunch of factories have been closed. There's a long delay to get stuff. So prices got pushed up because there's still people trying to buy them. In many cases, like lumber, there's more people trying to buy them because house prices are going up. So they want to build houses. People want to build their decks. People want to, finish their bedrooms, turn it into an office because now they're working from home or they're whatever. So we have, not to mention technology stuff that's more useful. Before, people were commuting to work, so they needed more cars and more gas, or maybe they needed less cars because people weren't traveling in cars. They were buying plane tickets, but now people don't want to buy plane tickets because everybody's sick on the plane or they're worried about them being sick or there's no global travel. So it causes, inside of a macro environment, small shifts that can cause certain things to inflate faster. But does that mean that those are permanent changes? Does that mean that that's permanent inflation? Or will eventually a free market will just make more of the stuff? So if we have more of the stuff and there's also more demand, eventually the prices will probably normalize because there's always somebody willing to sell it for a smaller percent over the profitability. So if there's one guy who was making 5% on a product and then all of a sudden there's limited of that product, so now he's charging 20% over what it costs him to make. Well, eventually, if there's enough of a margin for a long enough time, people will compete, step in, and sell the same product for 19%, 15%, 10%, and it'll go back to a normalized percentage rate. And that's why when they say the inflation is transitory, that's what they're referring to. Let the market kind of level back out and see if this is sustained inflation over time. Also, a lot of these numbers that we're seeing comparison-wise are compared to 1 year ago. Well, what was happening 1 year ago? 1 year ago, the whole world was shutting down and people thought it was about to be over. So anything we see over the past year, it's like comparing apples to oranges. Because now we're supposedly coming out of all this and we're supposed to be back to normal and everything's good and stocks are at all-time highs and houses are at all-time highs and used cars are at all-time highs and crypto's at all-time highs. But is the economy actually at all-time highs? No. It's just rebounding off of all-time lows. So, it's all about relative. And that'll be the lesson, I guess, from today's stream is, it's not about the number as much as it's about what you're comparing it to. Because if you say we're up 100% from yesterday in sales, and yesterday we sold nothing, and today we sold $1, well, yeah, we're up 100%, but we're really only up $1. If you say we're, down, 10% from a year ago, well, that's bad. But if you say we're up 50% from a year ago, well, that's good. Well, we're also, last year compared to the year before that, we might be down 1,000%, but we're up 50% from last year. So we're still down 1,000%. We're just up 50%. You know what I mean? So you got to look at it in relation. And the biggest thing about statistics that you learn day one in a statistics course is statistics can be made to say whatever you want to say. They're the most misleading thing that exists. So when they nonstop get on TV and talk about statistics, it's wait, pay attention and compare the number they give you to a couple other numbers. Oh, we only lost 500,000 jobs this week. Oh, we only lost 700,000 jobs last week. We only lost 800,000 the week before that. We only lost 700,000 the week before that. Well, add all those up. So we lost 2.9 million jobs this past month. And then they tell you how many jobs we gained this month. And they say, oh, we gained 1 million jobs this month. So we gained 1 million, but we lost 2 million. So we had a net loss of 1 million more jobs. But somehow they make that sound good because they say we only lost 500 this week. We only lost 700,000 this week. We only lost. And then by the time you figure it all out, well, wait a minute. We still had a net loss, but you're making it sound like a good thing. So it's all about the statistics and how they spin them and how it all actually plays out. Not necessarily the exact numbers that you're being fed or the overall like rosy picture. And you got to look at too, like all the different influencers you see on like mainstream television or crypto or stocks or whatever. Most people have a vested interest, especially with a big audience, to be bullish in whatever it is they're talking about because they're probably invested in it too. So naturally, like people on TV want to be bullish about the economy, like not to mention they are like probably forced to be, but also like crypto influencers are going to be bullish on crypto because they're probably invested in crypto. So if I have 200,000 people that watch my videos, that subscribe to my channel, it benefits me to make those 200,000 other people bullish because if each one of them is bullish and then they tell one of their friends or two of their friends or whatever, I can, infect 1 million people with bullishness, or I can infect 1 million people with bearishness, or maybe I lose subscribers or whatever. So you have to watch what people's vested interest is, what they're trying to spin you, and then put it all into perspective by looking at like a third variable. And I think that's what things like the Bitcoin dominance and the gold silver ratio are so important for. They can give you like a grounded third like variable to see the big picture from. You can kind of step back and look at the earth from space and get a much more realistic view of what's going on. So, well, there you have it, guys. Good to see you. Nice little rant at the end or whatever you want to call it there. Hopefully dropping some knowledge bombs on you guys. Very excited for this week. Good to see you, R-Kits, popping up there at the last minute. I'm sure you've been here. I just noticed your comment. But definitely appreciate you guys. Everybody have a good week, a great week for that matter. Stay safe. Protect those principles. Protect your capital. Make them dollars. Lock in those gains. Pay off that high interest debt. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. There's a good possibility that this really is back to business, back to normal. And we're going to see, this next year from now, just rebuilt, rebirth, growth, back to the good old days and maybe even better, hopefully even better. So, look at it, I think with an overall positive scope, but at the same time, look at a lot of these markets, stuff is already priced in. People have been at their houses for the last year, trading and speculating and investing and not at work. So are most of these people going to go back to work? Are people still going to trade? Is there going to be liquidity issues? Is there going to be money pulled out that people use to buy actual stuff, to invest, etc.? It's all relative, and we really got to pay attention to that. So everybody have a good evening. Good to see you guys, and I will see you again. What is today? Sunday? So we'll probably do maybe a Tuesday morning stream. I haven't been getting a ton of feedback on that one, but if people are interested, maybe do that Tuesday morning stream again. If not, definitely just do a Wednesday night. So see you guys Wednesday from 8 to 10 for sure. Maybe Tuesday morning if people seem interested. Yeah, definitely. Don't forget to click the like button. Smash the likes or else I'll find you. All right, guys. Everybody have a good night. Appreciate y'all. Appreciate the positivity. And hope everybody has a great week. Crypto Trend Trader. And I'm out of here.